Hey, welcome back to the Hub channel. I have Jeff Beamer here with me today. He is a professional money manager and the senior trade strategist over at Ewo Trader. Jeff, I know this last week we've had a couple of excellent trades that you've given us and our audience here at Hub. One of those trades is doing extremely well and has done well, and one of those trades is still in play. And I know we're going to talk about that later in the video today, but what else do you have for us right now, Jeff, on the U.S. market update?
Well, Brandon, it's great to be here with you. Another exciting week. Although markets were kind of quiet last week, we are in a definite downtrend in the S&P 500. Let's take a look at a chart here real quick. And we are at some support technically. This is some a long-term trend line that we are right now bumping up against or actually sitting down on. And, you know, I like to use, in addition to candles, I like to use Heiken Ashi candles. So let me bring those up because that helps define the trend. And you can see here, if you look, if we kind of zoom in and look a little closely, we have a series of candles here that are very bearish. And what I mean by very bearish is they don't have a wick on top. They just have a wick on bottom. And of course, they're colored red. Now, here we are on Monday. We're forming this week's candle, okay? And well, these are daily candles, but you kind of get the idea that the trend is down. So we have today's candle, and then tomorrow we'll see where we go. If we break below this trend line here, I definitely think we can see my target of 430. That's on the Spider Index Trust, 430. Now, markets today were relatively quiet, except for the Nasdaq. You know, the Nasdaq jumped in advance of Nvidia earnings, and we're going to talk about earnings in a little bit. But let me just pull up that one stock here on Nvidia, and it jumped over 8% today. On, well, just anticipation of their earnings. And as the chart comes up, I'm not sure what happened to it here.
Nvidia's big because right now with AI and everything else happening right now, I don't know if you saw this, but one of the Nvidia chips is selling for $30,000 right now. And it's a big play in the market. A lot. Yeah. Oh my gosh, $30,000 to make. There's news headlines about this. Everybody's talking about it because once you get your hands on one of those things, people are raving about it. So that's a big play right now, and people are really looking forward to this earnings this week on Nvidia. I think it's going to be a big one to watch. I'll get you back to the chart here, Jeff.
So yeah, it might already start moving in advance of the announcements, which we often see stocks do. They make a move prior to earnings. But let's jump into our headlines a moment. We'll come back to the earnings topic here in a minute. Let's talk about our headlines real quick. I saw the headline today that really is focused on the 10-year. That's the longer end of the curve, and we have hit the highest rate since 2007, okay, on an inflation-adjusted rate. And this is because the 10-year bonds are just dropping like a rock. Now, you can see this in what's important about this is in the inverted yield curve between the long end of the curve and the short end of the curve. And what you're seeing now is that inversion. And when we are below zero, that means the short-term notes and bonds are paying more than the long-term. Okay, so the ones and twos are paying a better rate than the 10s, 20s, and 30s. Okay, so the drop in the 10-year is actually good in a sense that those rates are jumping, and that's closing this inversion. Okay, now an inverted bond, this inverted yield curve is just not good for the economy. All right, when you can actually make more in a 1-year CD than you can make in a 10-year bond, that's a problem. Okay, and so you can see here in this chart that curve is what we call flattening. All right. Now, if we go back to our charts, I'll pull up TLT, which is the Barclays 20-year, okay, so it's on the long end of the curve, so it's the 20-plus year Treasury bond ETF, and you can see here this thing dropping like a rock. So when bonds go down, yields go up, and that's why you saw that yield curve going from a -1 to a 0.65, okay, on that inversion, is because this is dropping. Now, this is not good necessarily for banks, because banks hold these bonds, and of course, the value of the bonds is being eroded. Yes, they're making a better rate, but the erosion of the bond value is greater than what their return on those rates are. So this is kind of what's making the headlines this week, is just this drop in bonds, which means rates are spiking. And we'll see how this affects the other markets. Now, the short end of the curve, SHY, for example, this is the 1 to 3 year treasury, okay, the iShares 1 to 3 year treasury bond, and you can see that it's somewhat trading sideways. All right, it's already had its big drop, which created that wide inversion, and now it's moderated, just trading sideways. So this is actually kind of good for the market, good for the economy, that the yield curve is flattening since it is inverted. But we will keep an eye on this. As they say, we will be watching. All right. Now, this is important because when we're looking at the broader market dropping, okay, we can make trades based upon the broader market or on individual stocks. And over the past several weeks, I've been showing and demonstrating a trading strategy that happens on a regular cycle throughout the year, and that's earnings. Okay, we have been playing earnings for the past several weeks, and we will continue to do so as long as there's good potential in the upcoming announcements. All right, so let's take a look. Last week, I showed a couple of trades. One that we put on during the day. Not many people could have gotten into it necessarily, because by the time they saw the recording, but this was on ON, okay, on holding, AG. Now, the stock, and you can see the earnings announcement and the gap down, okay. The trade that we were involved with was a straddle, and it made $155, okay, on the trade. Now, $155, does that seem like a lot? Well, based upon our risk in the trade, in fact, I can go back to the earnings to the earnings date, which was, or pre-earnings, when we put this trade on. And if we go back one day, I'll just recycle the screen here, and the debit on our trade was $425. So when we make $155 on $425 at risk, that's a pretty darn good rate of return in one day. Okay? Now, we have had really good success over the past weeks. The other trade that I put on is still in play, and that is on Bath and Body Works. Sorry, not Bed Bath and Beyond, but Bath and Body Works. BBWI is the symbol. And since we put this on last Monday, you can see that the stock has been trading in a range, continues to trade in the range. Now, earnings are set for 2 days from now, okay? And we should get a nice reaction, hopefully profitable, but we should see nice action here in the next couple of days. All right, so what are we looking at this week? Well, this week we have some significant earnings. Even though we're past the many of the big names, we have more upcoming this week. In fact, let's pull up a list of those stocks that are in play this week. We have several. All right. Now, Nvidia is probably the one that has most of everyone's attention, okay? Because involved in AI, it's up over 8% today already. That's not until Wednesday after market close. That could be a real market mover, okay? But tomorrow, okay, we have Lowe's, all right? We have Dick's Sporting Goods, we have Macy's, Baidu, several other companies have earnings that day. Wednesday is the big day. We have Bath and Body Works, excuse me. That's Wednesday morning. Okay, Wednesday morning is that earnings announcement. We have Kohl's, Foot Locker, so lots of retail on Wednesday, and then we have some tech, Analog Devices, of course, Nvidia, and Analog Devices. I said that, and Advanced Auto Parts. Those Advanced Auto Parts is on my list. You'll see that here in a second. But we round out the week with TD Ameritrade, Intuit, Ulta. We're going to see if the ladies still are buying makeup or if it's gotten way too expensive. Ulta's been a great stock, but then has rolled over, and we'll see if Ulta can recover some of its sparkle, let's just say. And we have Gap and Intuit Workday coming up later in the week.
You had to do that. This is, and I have on the screen here. This is your Bath and Body Works. This is your Bath and Body Works trade that you put on, and you're still holding this one through earnings. Is this something that you would recommend a similar trade for Nvidia, based on what you think is going to happen? You're expecting a big move on Nvidia. Do you want something similar if you were to trade that one right now?
Here's the thing about Nvidia. It's very expensive. To trade the way that we are trading using straddles and strangles, that is very expensive. Now, it's not to say that it can't make money, but you're putting a lot of money at risk. And sometimes many people may not want to put that much capital, or as we say in trading, reduce our buying power by that amount. So I actually have two more trades for you this week. They're on that list that I just showed, and I'll show you the first one right now. We are going to do Dollar Tree, all right? So Dollar Tree, which is DLTR. Now, the thing I like about Dollar Tree is it trends really well, okay? It will get, whether it's going up or it's going down, and you can see here in the chart just how well it went up, okay? And now how well it's gone down. It's gone from 155 to almost 140 in about 3 weeks. That's a pretty good little trend. Now, you can also see what happened on its last earnings announcement when it gapped significantly. It went from 155 and closed around 135. Okay, well, it opened at 135, so it gapped down $20 on its last earnings announcement. Doesn't mean it's going to do that same thing this time, but the potential is there. Okay, so I like Dollar Tree, all right, and we're doing what we call a strangle. Now, the strangle is simply buying a call and buying a put with the same expiration date, but at different strike prices. In my risk graph here, you can see the flattened bottom, okay? And where you see the angle, anytime the black line changes direction, there's a strike involved, okay? So it looks like we have the 140 puts and probably the 143 calls here, all right? So not a very wide strangle, but I found that it's actually less expensive than the straddle, but has the same break evens, meaning these light blue lines up here for the upper break even, the light blue line down below for the lower break even. And that, we don't need the stock to necessarily go to those levels because we can make money just on the move, we're really focused on the red line here. Okay, so yeah, I'd like the stock to go up to say 153 or down to 127. Okay, I don't know if it will, but it sure would be nice. Okay, and we'll take those profits if it does that. All right, now our other trade that we have today is on Advanced Auto Parts. This stock, man, the amazing this stock and its decline. And you can see that on its last earnings announcement, yeah, that's this gap that you see here. It went from around $110 down to below 80. It opened up at 80 on the earnings day. Okay, so from 110 to 80, that was a $30 drop. And then look at this, has traded sideways ever since then. Now, I don't know if we're going to get a $30 move again, but I sure would like to see some of that same type of movement coming out of this stock, either good or bad. Either way, we just want it to move. So for Advanced Auto Parts, we're also doing a strangle for the same reason. It was a little less expensive, but the same break evens as the straddle. And as you see, the flattened bottom here, so a strike here on the put around around $65, and then another one here around $70 roughly. Okay, are the strike prices there? But you can model it out yourself whether you want to do the straddle or strangle. But these are the two that I'm really looking at this week for earnings, and both of them have earnings this week. Okay. So there's no waiting with Bath and Body Works. Excuse me, Bath and Body Works. That stock was prone to move in advance of earnings, and so that's why we put it on over a week in advance. We could have taken that off by now if the stock had moved, but it hasn't. It's been consolidating. So we're going to have 3 stocks this week that are in play and that we're going to be watching closely. In addition to Nvidia and others. So even though we have a very light earnings week, we have a lot to watch. Okay, and that's one of the great things about trading earnings. So Brandon, what do you think of those?
I seen all those trades, and a lot of the things that you were saying is you could kind of put on a trade at 70, maybe 68. Now, I'm one of those guys that wants the exact information here. So where can I find this or get these exact numbers that you're actually putting on in your trades, so that I can just kind of follow more of a hand-holding situation, Jeff, if you will?
Well, I can appreciate that, and I'm kind of the same way. So I do put these out in publication format over at EWO Options, okay? And you can subscribe to our newsletter, either Delta Neutral Trader, which focuses on sideways or slightly trending markets, or on these earnings plays through breakouts. All right, you can subscribe to one or both, and they're available. We give you the exact strikes, we walk you through the trades, provide commentary and updates, as well as the exit instructions through the publications. So that's where you can find out the exact information on these trades.
Thanks, Jeff. No, that's perfect. That's exactly what I needed. And that is a good set of trades this week. I'm going to be watching Nvidia, and I know a lot of other people are. And I know you might be a little bit apprehensive to trade. I think I would too, because I think there is a lot of time premium or volatility premium in those options right now. And who wants to pay extra for that? I'd rather just kind of popcorn it and watch the show on that one and trade these other safer plays. You know what I mean? So let's go ahead and do that. Jeff, I'm going to go ahead and give you the last word here, but thank you so much for stopping by the Hub channel again today. We always appreciate your feedback and what you have to offer us here.
Oh, this is great. This has been a great week so far. Our earnings breakout strategies have been working really well, as they do each and every quarter. And the way earnings have lined up this time, we've had several weeks, almost 6 weeks of trading straddles and strangles, and it's been very profitable. So as we continue on and earnings start to rotate out, and we have this lag of about 6 weeks before earnings starts again, we have a variety of other strategies that we trade. You know, stocks like like advanced auto parts that start to consolidate, we use delta neutral strategies to capture profits when they move sideways. So stay with us, watch each and every week, and I'll bring you more when we get into that cycle as well. So everybody have a great week, and we'll see you next time right here.